So today I am at a massive Ford dealership because they just reported earnings and they were absolutely horrible.
Shares of Ford, they are tanking after its massive earnings miss.
So after Ford reported its earnings, their stock sold off by about 17%.
Shares of Ford, that's brutal, down over 17%.
So Ford continues to show that time and time again, year after year after year, they are unable to produce a high quality product.
Why the miss? Warranty costs. Warranty costs are killing them.
So Ford is planning to lose between $5 and $5.5 billion in their EV division this year. And in just the last quarter, Ford lost $1.1 billion on these things. So the two biggest problems in this quarter for Ford, one, they have warranty costs, they have recalls that they have to spend tons and tons of money on. And two, these things right here, they continue to hemorrhage money in the EV space.
Ford lost billions of dollars on electric vehicles last year, and they may lose even more this year.
All right, so the biggest problem that Ford cited with this quarter was warranty costs. What does that mean? That means recalls.
Now to a consumer alert. Ford is recalling nearly 1.9 million Explorer SUVs.
That means when they make these vehicles and then there's something wrong with them after the fact, they have to bring them back in to these dealerships just like this one.
The National Highway Traffic Safety Administration says the F-150's rear axle can break. That can cause the truck to roll away when it's in park because of the loss of drive power.
And they have to spend money to fix these cars. So over this last quarter, they spent over $800 million more than they did last quarter. Let me say that, $800 million more. Not they spent $800 million, they spent $800 million more than what they did last quarter.
Ford is recalling more than 800,000 F-Series pickup trucks in the U.S. and Canada because their engine block heaters could cause fire.
And they didn't give the exact amount of what they spent. They didn't want to throw out that big number, but we can do a little easy math and it comes out to be about $2.3 billion that they just spent just on warranty costs. And check this out, this is where all the billions and billions and billions of dollars of losses are going. This F-150 Lightning, let's check it out, see what kind of price we got. It's a Lariat right here, F-150, and the price on it, $75,000. No wonder they're having such a hard time selling these vehicles. $75,000 for a truck that no one wants. And when these people are buying these Lightnings, guess what? They're wanting to get rid of them right as soon as they get them because they're finding that they're not doing exactly what they want to. So you're having the used market on the F-150 Lightnings, on the Mach-E's, are going down and down and down, and that's making it even harder for these dealers to be able to sell an F-150 Lightning because there's a customer out there that wants to buy one, then they can look at the used market and it's so much cheaper to buy one on the used market than it is to buy one of these brand new ones.
Its electric vehicles division had a net loss of $4.7 billion in 2023, and those losses could grow to about $5.5 billion this year.
So it's going to be harder for these dealers to move these Lightnings, and manufacturer Ford is going to have to push down the price if they want to actually give these Ford dealers a chance to move any of these Lightnings, any of these Mach-E's prices down, 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 down. So one thing the CEO of Ford really laid out to make it very apparent of what they want to go into is that they said on the EV front, the smaller the vehicle, the higher the margin.
Ford says its next generation of EVs will need to be profitable within a year of launch, and they will develop smaller and lower cost electric vehicles.
But it's the opposite with ICE. When you're looking at these gas-powered vehicles, the bigger the vehicle, the higher the margin. So that's why you're seeing this constant really push of these big trucks from these manufacturers and them taking away the small four-door affordable sedans, because the margins there, the smaller the vehicle, less the margin with the gas-powered vehicle. So this right here, way more margin, not affordable, more margin, more profit for the manufacturer. So you can pretty much guarantee that at least over the next few years, you're not going to see affordable vehicles come out of a lot of these big American manufacturers. What you're going to see is you're going to see high margin, big gas trucks. All right, check this out. See, there's a Bronco back there. We got a Bronco right here. We got a Bronco right there. We got a Bronco right there. We got a Bronco right there. Remember about 12-ish months ago, You couldn't find one? Well, guess what? Now they're sitting everywhere. We're gonna check this one out right here just to show you the price on it. Oh, I'm on the wrong side. It looks awesome, but guess what? They're not rare anymore. Vehicles that you could not find not just a little bit ago, now you can find them. $68,000. And remember, 12 months ago, every one of these Broncos on just about every Ford dealership that I went on to, they had a they had a $15,000 market adjustment up on these things. And guess what? We're seeing that because they're everywhere now, you don't have to pay market adjustments. These are things that are cutting into these dealers' profits. And you know what? Because they're sitting everywhere, they can turn down some allocations coming from Ford if they're producing a lot of these Broncos and the dealerships aren't selling. These dealerships, when they turn down allocations, that's when Ford stops making so much money. Ford's customer is not me and you. They are not going to the consumer. Ford's customer is this big Ford dealership right here. They are in the wholesaling business. They need these dealerships to take these vehicles. And when these dealerships can't sell these vehicles to the public, the dealerships stop buying from Ford. And when that happens, that's when earnings start going down. That's what we're seeing right now. We're seeing dealerships turn down allocations, and there's no wonder, right? Not an empty spot, not an empty spot, not an empty spot. If you go all the way down that way, that is their service center. Where customer parking for the service center should be, where parking for the vehicles that are being serviced should be, and they're all filled with brand new vehicles. There's no room in this lot anywhere for a vehicle to be parked. Dealerships are now turning down allocations. So Ford did have plans to make bigger third row SUV EVs, but you know what? They've seen that the market is what it is. They're seeing that they can't sell these Lightnings, they can't sell the Mach-E's, and they're seeing that the margins are way better on these big trucks. So what they're doing is they're taking away these third row EVs that they'd plan on making, and they're going to replace them with more Super Duty trucks. The plant that they were going to produce those vehicles, they canceled that, and now instead, they're going to start producing more Super Duty trucks out of that plant. All right, so check this out. This is more of what Ford wants to invest in. They're not making third row EVs in lieu of making more of these big Super Duty trucks, these big F-250s. This is what they're looking for, and this is the price, $88,000. And it's just really telling that, okay, the bigger the truck, the more money they're able to make, the more margin they're able to make. So no, they don't want to pump money into EVs that they can't sell. No, they're pumping it into these ICE trucks, these big Super Duty trucks, because that's where all the margin is for Ford as a company. All right, so here is the one bright spot for Ford right now. What is actually working for Ford is Ford Commercial. So this is really keeping Ford afloat right now. This is where they're making a lot of their money. This is a F550 for commercial use as a Super Duty truck, and this is $68,000. And what they'll do, this is the chassis. They'll end up putting either a like big storage box on the back of it. They'll use it for any kind of maintenance work or whatever. They'll be able to get these bare bones trucks and make them to whatever the company needs. And this is where Ford is making a lot of their money. Their sales on the retail side are not great. Fleet sales are great, and we already talked about EV sales are absolutely horrible. All right, so let's check this one out. More money lost sitting right here in front of your eyes. This is a Mach-E. Let's check it out. $46,000. This is actually one of the cheaper ones that I've seen on this lot, and it's still $46,000. And guess what? Sitting here, there's Mach-E's, there's no one over there. We have another row of them over here. They're just scattered everywhere on this lot. Here's one right here. We got more right there. They're everywhere. They're sitting absolutely everywhere. Here's the GT. Here's the GT right here. $55,000. But these Mach-E's, they're sitting absolutely everywhere. They can't sell them. Look, right over there. We got more of them down here, everywhere. So one big problem that Ford said with selling these EVs is there's a big misconception just surrounding the EV marketplace. And they blamed it on education, and they said that they really haven't done a good job educating the public on why they should have an EV. And I don't know that that's the case, but this is one of the big problems that I've had personally with Tesla too. And I feel like that, okay, there's a lot of things out there that people don't know about EVs. The problem is if you have to educate the public on new technology, that costs a ton of money. And this is money Ford really can't they really can't allocate to educating the public, because you know what, they're already hemorrhaging so much money, so they can't just add another education budget on top of what they're already just hemorrhaging selling these EVs, or I'm sorry, not selling these EVs to their customers. I mean, they're sitting everywhere. They can't sell these things. Education is a problem. I will agree with Jim on that. Education's absolutely a problem, but it's a problem that Ford is going to need Tesla to fix, because Tesla has the money to be able to educate. They have the resources to be able to educate the public. Ford does not have that. All right, so check this out. Look at all this. All these trucks that are all behind me. We have more trucks down there, those rows. And all of this over here, this is all service center parking. But guess what? Brand new vehicles everywhere over here. Let me turn you around. We have a whole line of brand new vehicles. You've got Expeditions, you've got Ford Lightnings, you've got Explorers over there. You've got more Explorers over here. You've got EVs filtered in here with ICE vehicles. You've got big trucks, you've got Super Duty trucks, you've got everything parked over here. So usually what happens at these big dealerships is you have a whole line of trucks. You got one little Bronco in between, but this whole row, other than that one Bronco, is trucks. Down there, you've got a row full of Broncos. You've got some Mach-E's. They're usually all together in one place, but because they're overfilled with all of these vehicles that they can't find a place for, they've just got a hodgepodge of just new vehicles that they're overloaded with all over here in their service parking. I couldn't even find a parking spot to come in here to film. I had to go park way over there because they have no open spaces over here. Even in their service department, they're putting new vehicles because they have no room to put them anymore. And just in case you need further proof, there's a whole another line of Mach-E's. So one thing that Jim Farley said has been a success for Ford and this management team is that they were able to take Ford away from producing too many generic vehicles. And really, we can look at the scope of what's offered from Ford. I mean, just look around here. Something that you're not going to see. What they're referring to as these generic vehicles are going to be, the affordable four-door sedans. Guess what? Ford doesn't make them anymore. So these generic vehicles that people actually want to buy, that people can actually afford right now, Ford's not interested in that. Look at this, truck, SUV, Super Duty truck, big truck. You're not gonna see anything affordable, not even really small trucks. I don't see very many Ford Mavericks out here. I haven't seen one yet offered for retail. So even that aspect of what we're looking at here, they don't want to make things that people can afford. They want to make the high margin, big Super Duty. That's exactly what Ford's leading into. Now, all these costs, they said, were related to vehicles that were built prior to 2021. I think what they want to say is a lot of the costs due to, when the crazy times when we had all this production cut. And they also stated that the vehicles that they're making now are considerably better. It seems like quality is better, but you know what? In a couple of years, we're probably going to find that maybe that's not the issue. Even on the call, we had an analyst say, okay, well, it seems like we have a warranty surprise cost just about every quarter. So when is this going to stop? And it seems like at this point, maybe it's not a surprise anymore. Maybe we should just bake in that, these warranty costs are going to be crazy. What's Ford doing about it? And Jim Farley just came out and said that what we're doing right now as far as building these vehicles is much better than what we have been. Production's better. So these things should start to level out and go down as we go forward. So we'll have to check in on them in the next few quarters to see how many surprises, or I think the surprise at this point is going to be if the warranty costs aren't so high, right? That's the surprise. But that's the surprise that Ford wants to have, but we're yet to see it. We're yet to see them make a quality product that can come out and not have to need repairs after the fact. So one thing I really loved about this earnings call is that the question section when the analyst came in. So usually what will happen in these earnings calls, at least the ones that I've been watching for me covering this car market, is that usually analysts throw throw softball questions. That's really how they get in there, because the companies don't want to answer a tough question. But it wasn't really the case this time. The first analyst that came up, they said, okay, well, Jim, you say that Ford is a much different company than what it was 3 years ago, but the stock market tends to disagree with you because of the stock price. We've got this big sell-off that just happened after you reported these numbers. And he actually asked Jim Farley if he thought that the company's valuation was cheap. Was it a good value? And Jim Farley said yes. And then the analyst immediately said right after, well, if you think it's a good valuation, then why isn't the board authorizing buybacks? Why aren't you buying your own stock right now? And Jim said that, well, he thought that there were better capital allocations than to be buying back stock, which he's basically saying, yeah, the stock is a good price, but we're not buying it right now because we think there's better use of our capital elsewhere. And what he talked about was investments. He wasn't specific. He wasn't specific at all. But as far as deploying that capital, he really wasn't specific in which investments were actually better than buying his own stock back. And I think that's really telling that that a CEO, I mean, obviously the answer is going to be that Jim Farley says, yes, I think our stock is undervalued. I think people should be buying it, but they're not actually using their own capital to do what Jim Farley is saying. So I really think when I read between the lines is that he's saying, okay, well, maybe it's not in the company's best interest to actually allocate funds to doing stock buybacks. And stock buybacks happen all the time in the stock market across a lot of these companies, especially when companies feel like they're undervalued. And I think it's really telling that Ford is not willing to invest capital into that right at this moment. And one just quick other note about that is that the analyst actually laid out that Ford was in the bottom 1% of performing stocks in the S&P 500. And what that should say, if the stock is undervalued, is that it's very, very undervalued compared to its peers, compared to other stocks in the S&P 500. So I think that the stock market knows something that you know, we all know. The car market is a very tough place right now. Car manufacturers are in a very bad place right now. Yeah, they put up some good numbers, but I think we've already peaked as far as profits go, as far as the amount of vehicles they are able to move through the system. And I think it's going to be down from here, and that's why Ford is at the 1% of all stocks in the S&P 500, because the stock market knows. It knows we're going down from here. So the biggest problems for they were not able to make a good sold off by about 18%. That is a massive